Welcome back to the HaasOnline training series. In this session, we're going to go over the Index Bot. Now, the Index Bot is a bot designed to help you diversify your long-term holdings into various altcoins and use the growth of those altcoins to increase your overall holdings. HaasOnline has implemented two algorithms into the Index Bot to help you accomplish this. The first being a portfolio percentage-based algorithm, and the second an individual coin growth algorithm. Now, don't worry if that doesn't make any sense now, because hopefully by the end of the video, it will. So let's talk about the Index Bot. All right, so let's go ahead and get started. First, we need to log into the HaasOnline interface. Once we're logged in, we can go ahead and create our Index Bot by hovering over the left-hand side and clicking Custom Bots. From there, we'll see this little window pop up. We want to click the plus mark, and then under Bot Type, click Create Index Bot. After that, we just give our bot a name. We'll just call it New Index. And then we need to select the account or the exchange that we want to connect to. For this one, we'll be using Bittrex. Once we've done that, we'll get a little notification in the bottom right-hand corner saying that our bot was created, and then we'll see it pop up here in our custom bot list. Let's go ahead and click that. And the first thing you'll notice is this distribution window. Don't worry, we'll definitely cover this in a bit, but for now, let's just go ahead and set it off to the side. Now, under general settings, most of these settings are pretty straightforward, but let's go ahead and walk through them to make sure that we have a full grasp on them. The first thing you'll see is the bot name. We've already set that so we can move on. The second's the account or the exchange we want to connect to. We've already settled on using our simulated Bittrex account. After that, we'll see our index coin. Now, this is the coin you have your long-term holdings in. This could be your BTC, your Ethereum, your USDT, so on and so forth. But it's important to note you're limited on what the base pair the exchange supports. So for example, on Bittrex, we only support BTC, Ethereum, and USDT. But other exchanges like Binance includes BNB. And this is really 100% dependent on the exchange you're trading on. After that, we have our index value. This is how much of our long-term holdings we want to commit to this index. In this case, I will be committing one simulated BTC. After that, we have the template. We can leave that limit for now. And then we have this individual coin growth checkbox. Now, at the beginning of this, we said that we had two separate algorithms that were implemented for this. The first being the portfolio percentage based, and the second being the individual coin growth percentage base. We can leave that blank for now, and we will definitely come back to it once we've already created our index, and I'll explain the differences between them. Now, what we're going to want to do is create an initial index. And there's a lot of options we can do with this. There's a lot of already well-known ones like the CCI 30 or various other indexes that people have created that they're using to measure their performance or their day trading performance against. But what we're going to do is we're going to use one of the newest ones, which is Coinbase's index. Now, they picked the 4 coins they support on their exchange. And what we're going to do is we're going to actually implement that exact same index within our Bittrex account or within our index bot. So what we first need to do is we know that it's 4 coins. So we're going to add 3 more coins. From there, what we're going to want to do is we're going to want to select them. Now, off the top of my head, I know it's Ethereum, it's Litecoin, and it's Bitcoin Cash. And I believe Bitcoin Cash is BCC on Bittrex. Now what we need to do is the amount. Now this is the allocation. This is how much of the portfolio is going to be allocated to each one of the, or to each coin. Now I know Coinbase has them kind of with weird percentages, so let me pull them up. And the first one we need to set is Ethereum. So Ethereum is at 27.62. Litecoin is at 4.07. And Bitcoin Cash is at 7.03. Now, you might be wondering, why don't we get to set BTC's value? Now, the reason we don't is because BTC will always be whatever is left over from your assigned allocation. So if you want BTC to be 15%, then you need to increase the value of the other coins that much. Now, we said we were going to get back to the distribution window, and you can see here, if we click under index distribution, we can see a nice little pie chart that shows how much of our current portfolio is allocated to each given coin. But if we click our current distribution, you'll see that all we're holding is BTC. So index distribution is what is our index distribution supposed to be, and current distribution is what is our distribution currently. Pretty straightforward. The next thing you'll see is the buy and sell threshold. Now, this is the percentage amount that you want to have the bot act on. And they can be different, but generally you always want to make sure that you're above the fee amount. So in Bitrix's case, we need to be at least at 0.55 threshold to make sure that we cover our fees. And you're like, okay, well at this point things are starting to get interesting, because they do. The threshold we set will highly depend on which algorithm we're using. So let's go ahead and begin talking about the difference between the portfolio percentage and the individual coin growing growth percentage. So the first thing you'll notice is there is no option to pick portfolio percentage or the portfolio percentage algorithm. This is because it's the default algorithm that the index bot uses. If we want to switch to the other algorithm, then we would click the individual coin growth. So let's talk about how this works. So we're going to explain first the portfolio percentage algorithm. Now the way this works is what we would need to do is set a buy and sell threshold for the portfolio percentage movement. Now what we mean by that is, let's say Ethereum is set to 28.6%. If we were to set a buy threshold of 2% and a sell threshold of 2%, what will happen is the bot will wait until our Ethereum portfolio percentage equals up to 30.6% of our total distribution. And then it will sell. If at one point it's at 26.6%, then the bot will buy. The whole goal of the index bot is to make sure that the distribution percentages are always correct. And at first this might be a bit confusing. It's like, okay, well, how do you make money in that case? Well, the goal of the bot is always to keep your distribution correct, but inherently by doing this, it's actually going to be accumulating more coins, because as the coin's value dips and your portfolio percentage and other ones rise, it's going to sell those at the threshold you set also. So in this case, like we just said, if Ethereum hits 30.6%, we're going to sell the 2% extra of our Ethereum distribution, and we'll put this in what we call our BTC reserve. Now our BTC reserve is profits we've made from selling our other holdings once they've hit the sell threshold. And we use that BTC reserve to buy our coins when they start dropping. So let's say BCC rose up 2%. So if we just keep this accurate, 2%, we always hit save. Let's say BCC hit 9.03%, our sell threshold of 2%. It's going to sell it to make sure that its distribution's back to 7.03% and put that extra 2% into our BTC reserve. Now, let's say after BCC's run, Ethereum drops 2%. Well, that 2% we made from BCC running, or increasing our portfolio percentage, we will use that 2% in our BTC reserve to buy the Ethereum that we were missing. And the bot does this constantly, 24/7, as the portfolio moves around. So that's how the portfolio percentage-based algorithm works. So let's talk about the individual coin growth. So if we want to activate that algorithm, want to go ahead and click the check mark and hit save. You'll notice nothing changes, but the algorithm in the back end does. So we were talking about the percentage of the distribution chunks. When we use the individual coin growth algorithm, this is now ignored. The only thing that matters is when was the last time we bought Ethereum and how much has that coin's value increased. So now what happens is we look at from when we bought Ethereum, did it increase 2%? Its own growth. Yes, it did. We sell. Did it go down 2%? Yes, it did. We buy. We no longer care about what that has done in our distribution side of things. We only care about the individual coin growth. Now, obviously, that means like we can't have these really small thresholds. I mean, we can if we're trying to make a very aggressive scalping index bot that's based on individual coin growth. But generally what you'll see is people who want a more conservative index, who want to make sure that they're, trading less but larger trades, would set this to something like 10% now. So now we would expect to see a 10% Ethereum individual coin growth, so its value increasing by 10% before a sell or before a buy. And that's the real main difference between the two. One's tracking the distribution percentages, the other one's tracking just how much is the coin worth from when I bought to now. Like, okay, well, what are some pros and cons of each one? Well, obviously, by using an individual coin growth, we're going to accumulate more fees because we're going to be executing more trades as compared to the portfolio percentage algorithm. But the portfolio percentage algorithm is larger moves. So it's more trades with more fees, or lower trades, larger trades with less fees. Both are appropriate for different reasons. Some might have a much larger index that they need to manage and they don't want to eat the really big fees, or their orders can't be filled in time for the quick trading. So they would want to probably opt for the portfolio-based percentage algorithm. As to where others might be using a smaller index and they want to be going for an aggressive scalping strategy. So individual coin growth will be the option they want to go with because they're willing to take the fees because they're hoping that the trade amount will overcome the fee amount. So you're like, okay, you've mentioned scalping a few times. How could I set my index bot to be an aggressive scalping index? Well, as you would imagine, all we have to do is bring down the buy and sell threshold. This is valid in most cases, or should I say in some cases, but in others it isn't. It really highly depends on your current index bot's configuration. So keep that in mind while you're creating your index and which coins you're putting into it. How do they react to the market? Because you still need coins to increase in value to buy the coins that have decreased in value. So picking coins that rise against BTC's fall is a good hedge against it. But you also need to keep in mind how much does my BTC, how much does my base coin or my index coin affect my overall coins or my overall index. Now, hopefully that's explained that enough, and I want to cover the next part. Currently, Haas has one of the only back-testable index bots. That means that we can test all of our index bots configurations in the past or check its past performance using our backtesting. And we can go as far as we want using the backtesting remote. So if we go ahead and click the backtest remote, you'll see this remote pop up. And we can actually backtest 1 day to 4 weeks or set a custom start date, end date. Once we've done that, there's a few things that will occur. The software will try to obtain, or should I say, will obtain all of the chart information that it doesn't have currently, and then download from our servers and then execute the backtest. The next thing you'll do is we'll see the output and view and trades. All right, so I've hidden myself. That way we have a little bit of room. So let's go ahead and move our backtest remote back down here to the bottom left-hand corner and our distribution to the bottom right-hand corner. Now, what you'll notice on the backtest remote is we actually can set a custom backtest. And generally, most people will want to test how their index bot did over the past market conditions so they can see if they were still profitable during the major downtrends and to see how much they would have lost if they were in that market at the time. So for me, we're just going to go ahead and set a 2-month backtest, set our start date to January 10th. And then we're just going to go ahead and fill in the rest of the threshold, buy and sell thresholds with 1. This is to make it an easy test. And then hit save. So the first thing we're going to test is the individual coin growth algorithm and see how that performs over 2 months. So when we hit start, the first thing that's going to occur is we're going to be loading the price data from the HaasOnline price data servers. After that, we'll get the loaded message. And this might take some time for the first time you actually pull the data down, as it is a lot of data and it really depends on your own personal internet speed or your VPS's connection speed. After we've got the loaded, we can hit start again, which will trigger the back test. And you'll see it's relatively quick, and then we'll get some results. So from here, you can see that we are at -6% using the individual coin growth which makes sense. You can't scalp a downtrending market. So what do we do? Well, let's do the same test with the portfolio percentage. Hit save and then run the same backtest. So let's wait for that to go ahead and execute. And what we'll see is instead of -6%, we get -4.8. It's still a negative, but it's less of a negative because we're not trying to scalp constantly all the way down. Now, there is no right or wrong answer here. It really highly depends on what your index is set to and the thresholds you give it. This is like any of our other bots. You're going to have to play with it to see how you can get the best results. And it's important to note, an index bot is not designed to be a short-term gain setup. It's designed for your long-term holdings to have gain across a long-term time frame. So just keep that in mind when you're running these back tests. If you notice that they're constantly in the red, just remember it. Our index is designed to increase in value as the markets increase in value. Hopefully that helped explain how the index bot can help you diversify your long-term holdings and accumulate more coin over time. If you have any questions, feel free to leave a comment below or join us in our Telegram room where myself or one of my support staff will help answer any questions you might have. Also, please remember to like and subscribe if you want to keep up to date with any new videos that we put out. Until next time.